Meta is still stuck in a downtrend. But here's the interesting part. Revenue is not the problem. Revenue is still growing. Future growth expectations remain strong, and yet the stock hasn't been able to meaningfully recover. So what exactly is holding Meta back? In this video, I'm going to go through revenue, EPS, operating income, and free cash flow to find where the weakness is actually coming from. Let's start with revenue versus price. Looking at Meta's revenue, there really isn't any obvious sign of weakness. The long-term trend is still clearly upward. But we've actually seen something similar before. Between 2022 and 2024, Meta's revenue continued to grow while the stock price collapsed from the high 300s to around $100 in roughly 1 year. And even after stock bottom, it took another year to fully recover. So the big question is, are we seeing a similar situation today where the business keeps growing but the stock continues struggling? To answer that, let's look at revenue growth. Looking at the year over year revenue growth, things still look pretty healthy. Based on current expectations, Meta could continue growing revenue around 15 to 20% over the next couple of years. For a company the size of Meta, that's very strong growth. So if revenue is still growing and future revenue expectations look healthy, then revenue probably isn't what's keeping the stock down. We need to go one layer deeper. Now, let's look at earnings per share. Historically, Meta's EPS has shown a pretty strong relationship with the stock price. During the 2022 decline, EPS dropped sharply and the stock followed it lower. Then, as EPS started recovering, the stock eventually recovered as well. More recently, the overall EPS trend is still upward, but we have seen a couple of significant drops over the past year. The correlation with the price isn't perfect this time, but this is our first sign that underneath the strong revenue numbers, profitability hasn't been completely smooth. And when we go one step deeper, things become much clearer. This is Meta's operating income compared with the stock price. And here, the relationship becomes very interesting. During the 2022 to 2024 period, operating income and the stock price moved very closely together. And we can see the same relationship again through much of 2025. And right now, operating income is trending lower, and the stock price is doing almost exactly the same thing. So, this may be one of the biggest reasons Meta hasn't been able to break out of its downtrend yet. The top line is growing, but that growth isn't currently translating into stronger operating income. Finally, let's look at free cash flow. This might be the most important chart of all. There have been very few periods where Meta's free cash flow experienced a major collapse. One of the biggest happened in 2022 and 2023. That was also the period when Meta stock dropped from the high 300s all the way toward 100. And now, in the most recent quarter, we have seen another dramatic drop in free cash flow. That doesn't mean Meta is automatically going back to $100. The circumstances today are different, but it does tell us that the recent weakness in the stock isn't happening for no reason. Revenue is still strong, but operating income and free cash flow are showing real weakness underneath the surface. So here's where I stand on Meta. I don't think Meta has a revenue problem. The bigger issue right now is profitability and cash flow. Operating income is trending down, free cash flow has dropped sharply, and until those metrics start improving, I don't think we have strong confirmation that Meta's downtrend is over. For me, those are the numbers to watch. If you enjoy data-driven stock analysis like this, consider liking the video and subscribing to the channel. It helps support the channel and lets me keep making more of these deep dives. Thank you for watching, and I'll see you next time.